Joncarlo, Mark, how are you doing today?
I'm doing well. How are you, David?
Good. I wanted to have a quick chat with you for the benefit of our viewers and our friends out there in private capital land about why it is that we think that the world needs another podcast. And yet it does need another one called Liquid Courage. Why do you think it's a good idea?
Well, I think it's a good idea, first of all, because you're the master of podcasts and you do a great job putting these podcasts together. The other reason why I think this podcast makes sense is if you take a look specifically at the topic around secondaries, it has become such an important part of the overall private capital markets. And its evolution is so reflective of the overall growth of private capital, private equity.
Well, let's talk about what we're doing and why we're doing it. We are launching a video podcast about the private capital secondaries market called Liquid Courage. We're also doing it in partnership with our friends at Piper Sandler, a very highly regarded private capital advisories group. But now let's talk about why you and I are involved in this. We are friends from the private equity industry. I was a financial journalist for many years, and I met you while you were overseeing private equity for CalPERS. Then we discovered that we both went to UC San Diego in the early 90s. And so we have that commonality. Frankly, I don't think I could get into UC San Diego these days.
Would be a challenge, wouldn't it? Right. For both of us.
Well, over my years as a financial journalist covering the private capital markets, I always liked the secondaries market. Once I figured out what it was and figured out the strange language that you guys use, it's a distillation of everything that's going on in the market. And it's almost like you can see into the future if you kind of understand the private capital market. So it's a great topic. One thing that I think a lot about, if you look at the stock market, the public markets, the turnover on an annual basis in that market is like 100%, right? And then you move over to the private capital market and the turnover, if that's what we want to call secondaries, it's like around 5%, right?
Jefferies predicts that the private capital market will be $25 trillion by 2030. And if you just took 2.5% of that number, which is sort of where they're predicting the secondary market will be, that's over $500 billion of transactions in the secondary market. By the way, that number covers everything from private equity, private credit, venture capital, infrastructure, real assets. This is why secondaries are so fundamental to what's happening in the investment world as private capital in general becomes more and more of a mainstay of everyone's investment portfolio, including people who have 401ks.
It's almost like wherever there is illiquidity, the secondaries market is there trying to untangle things.
Can I use an analogy that I think is oftentimes stated about private equity? It's a bit like a marriage when we talk about fund investing, right? You have two groups that come together. They make a commitment in the beginning part of a fund. The fund evolves sort of like a marriage over time. Things happen, things go really well. Sometimes there's a problem in that marriage. And then what has to happen? Well, an LP may say, you know what, this is time for me to take an off-ramp and exit the relationship. Sometimes there's a need to inject more resources into this marriage. You could use the analogy of a continuation vehicle or restructuring of a fund that realigns interests with the existing investors, or perhaps you bring in a third party for counseling, or in some cases, a GP transition. All of those things are happening right now.
Not to get too dark, but in some marriages, people want to swap out a partner for a partner that they'd rather be with. And so if you take that to the private capital market, maybe you're in a bunch of venture capital funds and you're willing to just sell at a discount because where you'd really like to be is in infrastructure funds. In the old days, that would have been an exceedingly painful set of transactions to do if you could even do them. Today, the whole infrastructure is set up to do exactly that.
Transaction costs are going to have come down substantially already as more and more of the documentation around transfers has become more streamlined. It's not all the way there yet. With the one positive element of retail money coming into the fold these days means that there is going to be even more need to provide liquidity to retail investors. All of that is going to bring additional standardization of documentation and make it easier so that one can manage their private capital portfolio in a more efficient manner as well.
The whole wealth channel, the individual investor market is really interesting because, again, back in the old days, if a high net worth individual with a $500,000 commitment to a private equity fund wanted to get out, that was such a pain that maybe the GPs would decline because they don't want to go through all the expense, hire the lawyers, do all the valuations for a $500,000 ticket. As you're saying, the frictional pain of doing these secondary transactions, even on an individual investor level, is being reduced.
I just think it's a natural evolution. You can't just have individuals get into an illiquid asset class without also giving them viable options to get liquidity, particularly, David, if we move to a situation where people are investing in private capital through their 401k accounts. Go back in time to the year 2000. The primary users of the secondary market were the financial institutions, the banks, the insurance companies who were focused on liquidity because of regulatory rules that impacted their ability to hold funds. You fast forward to today, you have institutional investors that are increasingly using the secondary market as a portfolio management tool. You have the general partners themselves using the secondary market as a way to raise capital, as a way to support their firms, support their companies. You have all sorts of forms of liquidity, whether it's a traditional LP-led portfolio secondary sale, now a more mainstream continuation vehicle world. So it is quite dramatic how much the secondary market is impacting everyday life in private equity and private capital overall.
Secondaries transactions are sometimes a little fraught with maybe interpersonal issues because you have one party leaving and perhaps the other party wishes that weren't the case. But it's a much friendlier market and much more normalized than it was years ago, when perhaps going to the secondaries market was considered a little bit embarrassing, or you were kind of rejecting your GP. And maybe there are hard feelings all around, but that's not the case at all anymore.
Everyone is using the secondary market. Yes. If you go back 15, 20 years ago, many investors were reluctant to tap the secondary market, fearing that it may impact their reputation in some way, shape, or form as not being a long-term investor. You look at today, the GPs are as active utilizing the secondary market to create liquidity, to raise capital, to support their best companies, to allow them to hold companies for a longer period of time and give their LPs an option to exit while allowing others to stay in alongside them and continue to build value in those businesses over the next 3 to 5 years.
Well, I think the biggest challenge that the Liquid Courage video podcast is going to face is simply booking people's time. You secondaries pros are extremely busy because of the aforementioned booming secondaries market. There's a lot of deals to do.
There's a tremendous opportunity out there. The more investors are educated on the opportunity set, the better for everyone. And that is why people are willing to put in time to provide this information as really an educational tool to the market.
Joncarlo, well, I'm looking forward to our next recording session. And wherever you're going today, I wish you luck in all your liquidity adventures.